Hello, my name is Ashlyn Spoward, and this is my presentation of my strategic analysis of Crown Castle. Crown Castle is an American telecommunications company, and it operates as a real estate investment trust. They were started in 1994, which has given them 25 years of experience in the industry. A brief industry analysis about the infrastructure REIT industry. There are 7 total firms in the United States that operate as an infrastructure REIT, producing a market capitalization of $165 billion. Market capitalization is the total dollar market value of a company's outstanding shares of stock. So this is obviously a lot. The total return in this industry was 6.99% in 2018, which was higher than the S&P 500's return of 6.59%. So this shows growth within the industry. Some trends within the industry include the rise of 5G, which is fifth generation network. It's becoming the popular go-to network for wireless communications. And 5G has been predicted to create $12.3 trillion of global economic output and 22 million jobs. Optical fiber cable is another trend within the industry. It's called OFC for short, and it's becoming the preferred transmission medium in this industry. And OFC is predicted to register a CAGR of 12.26% from 2019 to 2024. A brief environmental analysis or pestle analysis about the industry. It was hard to find information on the macro level industry for infrastructure REITs. So most of these pestle topics are going to be just on the REIT industry itself, but it still obviously impacts the infrastructure REIT industry. So a political factor that is impacting all businesses across America is the trade war between the United States and China, but this actually benefits the REIT industry as they're one of the least trade sensitive stocks out there, which is very promising and helpful for the future. Tariffs on raw materials like steel and lumber specifically benefit cell tower companies like Crown Castle because building these new towers could become extremely costly if the trade war continues and prices continue to rise. So they could really leverage their existing assets and they'll become that much more valuable to their customers. An economic factor that impacts the REIT industry is the growth rate of the American economy. This again kind of impacts everything in that operates as a business in America, but specifically also REITs as well. Interest rates also have a heavy influence on the industry. REITs typically have a positive relationship with interest rates, except for when the federal government is tightening monetary policy. So it's just something for REIT companies to be aware of when those times are when the federal government decides to tighten monetary policy. A sociocultural impact that affects the industry is increasing expectation from consumers for REITs to positively impact the environment or the companies that they operate in. This is a big one, and it kind of ties into the environmental part of the pestle analysis in the next slide, but they're kind of one and the same. But this is a huge trend all over America, and specifically for REITs because REITs are so heavily intertwined with the communities that they operate in because they're using that land, they're building infrastructure within those communities. So it's becoming very important for the people living in those communities to really see companies taking that seriously for them and giving back to those communities. So a technological factor in the pestle analysis that has impacted the REIT industry would be high-tech REITs. They are becoming prominent in the market. They are creating billions of dollars of revenue, and so that is something to be aware of, as well as 5G and fiber networks that are driving growth in the industry and helping the world stay connected. Again, this 5G, the fifth generation network, is becoming a huge network for all across America. So it's becoming a big trend in the REIT industry specifically, and it also relates to Crown and companies around Crown that build the infrastructure for this network. So again, environmental, it kind of goes along with a little bit of the social, but some environmental trends that are becoming popular among REITs are to be aware of climate change, opportunities and risks, greenhouse gas emissions, energy, environmental policy, and environmental management. And these are all trending issues revolving around REITs because REITs are real estate essentially. So all these things could definitely impact their land or whatever, depending on how the world is changing and how the environment is. And finally, legal. Legal is a big one because there are very specific standards that have to be met in order to be considered a REIT and to get the tax benefits that come with a REIT. So in short, to be considered a REIT, you have to have 90% of your taxable income as paid out in dividends, and 75% of your assets must be invested in real estate. So these specific tax requirements create a complex atmosphere around REITs, and that can be intimidating to not only new entrants to the industry, but also to investors who aren't really sure what REITs are, if they're good or not. So that is something that definitely impacts REITs. So basically, the key drivers are the economy, the technology, and the legality of REITs. Basically, if the economy is doing well and interest rates are positive, REITs will most likely be doing well. Obviously, technology plays a huge part for companies like Crown Castle, who are actually building the infrastructure and have to make those changes. And then the legality of REITs also play a huge part because they create a complex environment that has specific requirements and that is strictly monitored. So a brief competitive analysis, there's Crown Castle and their two main competitors are American Tower and SBA Communications. As you can tell from this short little chart here, there are very close competitors. They are very similar in a lot of aspects. And the one main takeaway from this comparison is that Crown Castle is basically only differentiating themselves in that they are clearly focused on just domestic. So they are not an international company, even though it's Crown Castle International. They are not international. They are just domestic, which kind of differentiates themselves from the other two companies, from American Tower and SBA Communications. So Portis by forces, the rivalry among competitors would be the highest force and it would be the most impactful one because, like previously mentioned, those other two companies are very close. They have similar business models. They are all both REITs and they all have the same main four customers, which are Verizon, T-Mobile, Sprint, and AT&T. So they're all kind of fighting the same fight and just seeing who comes out on top. Threat of substitutes is low. You can't really substitute real estate. You can't really substitute infrastructure and networks like that, so it's low. Threat of new entrants is low because of the complexity of the environment. The bargaining power of buyers is relatively medium, and the bargaining power of suppliers is relatively medium as well, based on the changing environments. So some financials to take note of include the revenue that Crown Castle had in 2018 was 5.42 billion. The revenue that American Tower had was 7.44 billion in 2018, and SBA Communications revenue in 2018 was 1.866 billion. So an important thing to note in this is that American Tower and SBA, their revenue includes their international revenue as well. So when that is taken out, Crown Castle actually comes out on top as the top domestic winner. So that is just something to keep in mind. And then also, there are a few more statistics for Crown Castle and American Tower versus SBA Communications, just because SBA is not as big. They're not as a big threat to Crown Castle as American Tower are. So in a lot of the research that was done, American Tower and Crown Castle were always compared, and SBA was just kind of an afterthought. So they're still important, but they're not as big yet to be a huge threat to Crown Castle. So SWOT analysis, some of Crown Castle's strengths include their innovativeness, their ability to make strategic acquisitions, their customer service, and that they're purely domestic. This last one can be seen, and it will be seen in the weaknesses. It could be seen as both a strength and a weakness, depending on how you want to look at it. But for strength purposes, they've been able to be on top this whole time, basically. So you could say that that has been a strength of theirs. And then weaknesses include continued reliance on the potential of small cell and fiber networks. They're putting a lot of their resources and assets into small cell and fiber networks, and it's hard because there are relatively low switching costs and there's no real competitive advantage with small cell and fiber networks. So whenever their competitors decide they want to catch up, it won't really, I mean, Crown Castle will be ahead, but it won't really, they won't have a competitive advantage to kind of build those economies of scale. And then they have no plans to invest in edge data centers, which are becoming more popular. And again, they don't have the global presence, which they're missing out on potential revenues. So their opportunities include investing in data centers, continuing to invest in the 5G and leveraging their current assets, and re-entering international markets should they choose to do so, because they have the resources and the capabilities to do so if they choose. Threats include the perception of overvalued stock, which could result in a mass selling of their stock, which could impact them heavily. AT&T has, in the past year, warned to use other tower companies if the major ones don't lower their prices. So AT&T is a huge customer of Crown Castle's, and if they decide to pull out, that would be a really big detriment to Crown Castle's financials. And then the consolidation in wireless industry, new technology, is reducing the demand for cell towers, which could, again, cell towers, the revenue that Crown receives is 70% of revenue total is from cell towers. So that could definitely be a hit. And then they got subpoenaed by the SEC for some of their, for how they were recording some of their transactions. So if that comes to fruition, that could also be a huge detriment to them. So their overarching core competency that their CEO, Jay Brown, says that they have is that they build on their core competency as the leading provider of U.S. wireless infrastructure. So they've been able to maintain this core competency through their domestic strategy because it's unique. And a core competency is a defining capability that's an advantage, and it distinguishes an enterprise from its competitors. So their domestic strategy is definitely unique, as the other two are international. And actually, Crown used to be international, but they sold their Australian counterpart to finance a Synesis, which is a major company here, acquisition. So their ability to strategically acquire companies is also another core competency of theirs. So as I mentioned, Crown does not have an international strategy, but American Tower does, and they're very successful with theirs. So if Crown were to go international, they could probably use American Towers as a baseline just to see like their strategy, how they've been able to enter markets and things like that. And then should Crown ever choose to go back in, they have the ability to make strategic acquisitions, they have the capital, so they kind of have the know-how should they ever choose to go back into the international markets. So Crown is a more hierarchical and multi-divisional structure. They're mainly mechanistic with some organic traits. This can potentially inhibit Crown's ability to adapt, but yeah, they're a typical company. They have their board, the CEO, Jay Brown, his executives, and then, it flows just like you see on the screen. So it's more structured than it is organic. So Crown does not directly list their human resource policies, nor do they directly list their social responsibility statement. However, they are heavily involved in the communities that they work in. And as far as leadership goes, Jay Brown, the CEO, is a great leader. He leads by example. He's been able to help the company remain true to their core competency. And he mentions that in every conversation, he tries to make a friend, which really does help their core competency, because in the case of a strategic acquisition happening, if he's coming to that company as a friend, it would be way more likely that this will go smoothly and they'd be able to acquire the company than if he comes at them, in a mean way or like superior to them. So that was a great piece of advice that I learned from him. So the overall strategic issue that I found for Crown Castle is that they've been too reliant on small cell and fiber succeeding. They have not created a plan in case this trend goes away or something like that, and they have not created a competitive advantage with either of these infrastructures. Like I said, it's not that hard for their customers to switch once their competitors start catching up, so they need to be able to create a competitive advantage over these infrastructures. So I recommend to create a contingency plan to divest small cell and fiber assets in the case that the returns are not continuing to meet standards, and then create a competitive advantage on the small cell and fiber networks that will make it harder for competitors to replicate. And finally, don't forget about the main revenue source in cell towers. Continue to leverage this operation, and don't forget that that's your main. And thank you. I hope you enjoyed my presentation.